You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 27th of November, 2017. We see that stocks, the S&P 500 and the Nasdaq 100, both those indexes up for the day and up for the week. We see TLT down for the day, 0.28%, but we see an up green candle for the week. And of course, gold also going up, down for the day, 0.25%. Let's jump on that weekly chart first for the S&P 500 as depicted by the exchange-traded fund SPY. What do we see going on? Well, we see that we have a green up candle with a big green wick on top, about the same size as the candle itself after a prior spinning top for the prior week ending the 17th of November. We see that the derivative oscillator has moved from going down to actually ticking back up a little bit. I'm sorry, that's the price percent oscillator. Derivative oscillator is continuing to lose energy. Now remember, our primary indicator that we use for making our trading decisions, again, we keep it as simple as possible. If you don't understand what our theory about using the charts is, it is simplicity. And please go back and listen to our How to Read a Stock Chart video and the other stuff that we have at both the website and on the YouTube channel, particularly the website, chartingwealth.com. If you're not already signed up for, go ahead and do that. Sign up for our daily market review that includes this weekly comprehensive review and forecast. And with that, you'll receive all the materials up to date as soon as they come out. We typically put it out first for the folks that are subscribers. In addition, you'll receive our How to Read a Stock Chart video, the layout that we use at freestockcharts.com, the daily market worksheet, the weekly market worksheet that you should be filling out right now, along with the trade worksheet that you fill out with every trade. This provides you with a trader's diary so that you will, over time, amass an incredibly valuable volume of what you've learned. And only if you do this are you maximizing what you're hearing from us. And again, that's the way that you progress. If you want to put your training on steroids, then for the 10 minutes you listen to us a day, make sure you fill out the daily market worksheet Tuesday through Friday, and then over the weekend for that Monday broadcast, which is the comprehensive review and forecast, you fill out the weekly market worksheet. Let me tell you, there's nothing that's going to supercharge your training and help you understand what you're doing more than that. Okay, back to the charts. We have a green up candle after that prior week of pullback. So the market's continuing to tick up. Am a little, we're just paying attention. Derivative oscillators continuing to lose energy. But again, it had a down move back. We're sort of digested some gains from the 11th of August through about the week ending the 25th of August. And then things shot up over the last many weeks with just that one pullback, with the week ending the 17th of November. So again, we're seeing continual up movement. When will this stop? We don't know, but we'll be ready to react when it does. Now, the two-day chart's still in a confirmed down move. That means, of course, we don't have a trade on the S&P 500 because both our weekly and our two-day have to be moving in the same direction, but it could be getting close to a crossover going up. Hasn't happened yet, even though we've got 3.5 two-day candles of up movement. So again, just continue to watch what's going on, and when we have a crossover on the two-day going up, if that occurs, we'll wait for a slight pullback on the 4-hour and then a jumping in point. 4 hours continuing to rocket up since it crossed over on the morning of Tuesday the 21st. It went up both in the morning and the afternoon on that Tuesday, sideways on Wednesday. Remember, market closed on Thursday, and then up on Friday, again, hitting about the same point. So we'll continue to watch the S&P 500, see what we see. Let's move on to the Qs, up 0.37% for the day. Qs have been rocketing up 3, 6, 8 weeks so far. Again, movement well above the weekly trend line. We had the weekly and the blue two-day crossover at about the same time, right around the 27th, Friday the 27th of October. And of course, we've had since then 4 weeks of solid up movement. If we look at the two-day chart, what do we see? Well, of course, two-day chart crossed over going up there around the 27th, that is Thursday the 27th of October. went up for several days, slid sideways, and then started moving up again strongly on Friday, the 2-day candle ending on Friday the 17th. So we've seen growth from somewhere around a jumping in point of about 148 or so, all the way up to 156. Is that not a sweet and beautiful climb? Again, that's what makes it so beautiful if you trend follow instead of trying to guess and gamble. What do we see on the 4-hour chart? Of course, it crossed back over going up on the afternoon of Tuesday, the 21st. If you would have jumped in sometime in the morning, if you had pulled yourself out when that down move started and then jumped back in, just playing our typical, regular, traditional way of teaching you to trade, would have jumped you in somewhere around the 155 mark, something like that. And again, as high as 156.24 just 2.5 days later. So pretty nice. Again, if that's what you did, just continue focusing on that 4-hour candle. Don't lose the momentum and the profits that you've gained. And again, remember, we're not a stock calling service. We're an education firm. I want you to practice these as virtual trades. You can do them just on paper, or you can open up a virtual trading account at almost any of the online brokers. They'll do that for you for free. Put $1 million virtual dollars in there and see if you can become a multi-millionaire. When you do that, then and only then can you apply all your knowledge and potentially think about maybe trading some money on your own. But that's your decision. We don't make that for you. What's going on the TLT? That is a 20-year bond fund. Of course, getting close to crossing over, going up, but we are not calling it yet. That's a hard one, but the derivative oscillator is still negative, and we really don't have a crossover. There's a down day on Monday. It'll pull right away from that red signal line. We don't have a clear crossover. We're not calling that just yet. We do have 4 weeks of up movement, and the last week has been a strong week of up movement. Of course, we're still in a confirmed down move on that weekly chart. Doesn't give us a clear jumping in point yet. What do we see on the 2-day chart? Well, the 2-day chart crossed over going up back on the 3rd of November. Now again, I'm not going to discourage those of you who want to see that as a weekly vertical crossover on TLT and practice it around 10:30 on Monday if things look sweet in the charts. Look at the chart after idiot hour. Those who don't know what idiot hour is, take all of the training that we have. It's really the first, excuse me, the first hour that the market is open. The market makers have a whole lot of power and control. And until that time period ends, we don't really look at the market as officially settling out to really know which direction it's moving. That's why we hold back whenever we're looking at jumping in on a weekly vertical crossover. I'm not discouraging you from doing that. And again, I'm not discouraging you from doing anything except wasting your time gambling and guessing. We are trend followers. And if that's a good enough trend for you and you want to practice it, see how good it is, please by all means go ahead and do it. Remember, our 2-day chart crossed over going up back on the 3rd of November. It then backed up on us on the 9th through the 13th. That's the 2-day candles ending on those days. And then for the last few days, moved up, but so far the first half of the latest 2-day candle is a red open box down candle. A little bit of warning there. Derivative oscillator is losing money. Price percent oscillator is not going up at the same pace. And remember, on Friday, TLT was down 0.28%. What do we see on the 4-hour chart? Well, of course, it's heading down for a crossover going down. Again, might give you some concern about jumping in at the beginning of the week just with this down move on the 4-hour. But again, practice it. If the 4-hour, turns around and starts moving up and you want to think about jumping in then, by all means, try it. Again, we're all about practicing. And again, the only thing we're concerned about, my friends, is doing what works. And again, our experience has been until you have a clear crossover on that weekly, you're taking more risk than you need to. Let's keep moving ahead. What do we see now on our last chart? That is gold. Gold, of course, has been sliding sideways for a while on that weekly chart. We do have an up candle, but it's really sort of a spinning top. It's got a wick on the top and a wick on the bottom on the weekly. The derivative oscillator is still in the negative, and the price percent oscillator still in the negative. We're hitting the 10-minute mark right now. I'm going to wrap this up as quickly as I can for you. I am trying to be cognizant of that, my friends. That's all we ask is literally 10 minutes a day. We see that the price percent oscillator is actually heading back down again a little bit on the weekly. So again, keep that in mind with gold. All things being equal, the market tends to move in the direction of the largest chart. Gold's a little bit different. What do we see on that 2-day chart? It crossed over going up. Back on the 2-day chart ending on Friday the 17th. That was the past Friday. So what's happened? Well, movement's still above the 2-day chart, but a red spinning top. So, well, no, just a red open box with a wick on top about the same size as the box for the first day of the latest 2-day candle. What's happening on our 4-hour chart? Well, it popped up on the 22nd in the morning. That's Wednesday. And of course, nothing was happening on Thursday. Markets were closed and then sort of down and sideways on Friday. So again, gold's got some schizophrenia going on right there. And we're getting toward the time period when our 4-hour chart stops really getting clear and working for us. You can look back on these charts and see how beautiful it was. Here over the last few weeks, it has started getting sloppy. And again, it may continue to be sloppy through the end of the year. How long do you do things? As long as they work. When they stop working, you don't do them. And the 4-hour chart is stopping working. We will see. It could continue to pop around and move up. And those of you who want to practice it, you can sure do that. But we don't have any clear movement at the present time on gold. Thank you so much, my friends. You have questions, problems, concerns, let us hear from you. We appreciate you. CW at chartingwealth.com. Sign up for the daily market review at chartingwealth.com. God bless from the entire team here at Charting Wealth World Headquarters.